I need to tell you something that's been burning inside me for decades, something the financial establishment doesn't want you to know. Something that could mean the difference between financial freedom and a lifetime of struggling paycheck to paycheck. And what I'm about to share with you isn't theory. It's not academic nonsense from some ivory tower professor who's never built anything. This is real knowledge forged in the trenches of real business, real investing, and real life. You see, I've been warning people for years about what's coming. I wrote Rich Dad, Poor Dad back in 1997, not to make money, but to sound an alarm. And now, nearly 3 decades later, everything I warned about is coming true. The gap between the rich and everyone else isn't just widening, it's becoming a chasm. The middle class isn't shrinking, it's being systematically destroyed. And the financial education system, the very system that's supposed to help you, is actually designed to keep you poor. Now, I know that sounds harsh. I know some of you are thinking, here goes Kiyosaki again with his doom and gloom. But stick with me, because what I'm about to reveal isn't just about problems. It's about solutions. It's about how you can position yourself not just to survive what's coming, but to thrive, to become wealthy while others are losing everything. Because that's what Rich Dad taught me. In every crisis, there's opportunity. And we're heading into the biggest crisis and the biggest opportunity of our lifetimes. Let me take you back to my childhood in Hawaii. I had two fathers. My poor dad, my real father, was a highly educated man. He had a PhD, was a head of education for the state of Hawaii, a government employee who believed in job security, benefits, and working your way up the ladder. He believed in the traditional path. Go to school, get good grades, get a safe, secure job, save money, buy a house, and invest in a diversified portfolio of mutual funds the long term. My rich dad, my best friend's father, barely finished 8th grade, but he became one of the wealthiest men in Hawaii. He didn't believe in job security. He believed in financial education. He didn't save money, he invested it. He didn't work for money, he made money work for him. And most importantly, he didn't follow the advice of financial planners and traditional financial advisors. He followed the tax code, he understood debt, and he knew how to use the system that the rich use. These two men, both successful in their own ways, gave me completely opposite advice about money, and I had to choose which path to follow. My poor dad would say, go to school, get a good job, work hard, save money, get out of debt, and invest for the long term in a diversified portfolio. My rich dad would say, financial education is everything, don't work for money, acquire assets, use debt as a tool, and understand that savers are losers. I chose to follow my rich dad's advice, and it made me a multimillionaire. But more than that, it gave me financial freedom. I don't have to work. I choose to work. I don't need money. Money works for me. And that's what I want for you. Not just wealth, but freedom. Now, let me be very clear about something. The financial system is rigged. It's not a conspiracy theory. It's a fact. The system is designed to transfer wealth from the working class and middle class to the wealthy class. And it does this through 3 primary mechanisms: taxes, inflation, and financial ignorance. Let's start with taxes. Most people don't understand that there are different tax systems for different classes of people. Employees pay the highest taxes. They earn money, it gets taxed, and then they live on what's left. This is the highest tax category. Small business owners who are self-employed, the S quadrant as I call it, they also pay high taxes. They have to pay both the employee and employer portion of Social Security and Medicare taxes. But big business owners, people in the B quadrant, they pay much less in taxes. Why? Because the tax code is written to give them incentives. If you provide jobs, if you provide housing, if you provide energy, the government gives you tax breaks. And investors, people in the I quadrant, they pay the least in taxes. Capital gains rates are lower than ordinary income rates. And if you know what you're doing, you can defer taxes indefinitely through strategies like 1031 exchanges. This isn't cheating. This isn't immoral. This is using the system the way it was designed. The tax code is essentially a series of incentives for people to do what the government wants them to do. If you provide housing, you get tax breaks. If you provide energy, you get tax breaks. If you create jobs, you get tax breaks. But employees get no tax breaks. They just pay. My poor dad, despite his high salary as a government administrator, paid a huge percentage of his income in taxes. My rich dad, who made much more money, paid very little in taxes percentage-wise, not because he was cheating, but because he understood the code. Now let's talk about inflation. This is the invisible tax that nobody talks about. The Federal Reserve, which despite its name is not federal and has no reserves, has been printing money at an unprecedented rate. Since 2008, they've created trillions of dollars out of thin air. And what happens when you create more money? Each dollar becomes worth less. Your savings in the bank are being destroyed by inflation. The government tells you inflation is 2 or 3%, but that's a lie. Real inflation, if you measure it the way it was measured back in the 1980s, is closer to 10 to 15% per year. Your food costs more. Your energy costs more. Your housing costs more. Everything costs more. But your wages aren't keeping up. This is a hidden tax on savers. If you have $100,000 in the bank earning 1% interest, but real inflation is 10%, you're losing 9% of your purchasing power every year. In just 7 years, your $100,000 will have the purchasing power of about $50,000. Your money is being cut in half, and you don't even realize it. This is why Rich Dad said savers are losers. Not because saving is bad, but because saving in dollars in a currency that's being deliberately devalued is financial suicide. The rich don't save money. They save gold, silver, Bitcoin, real estate, businesses, things that hold value or increase in value as the currency is debased. The third mechanism is financial ignorance. And this is the most insidious of all. Our school system is designed to create employees, not entrepreneurs, not investors, not financially educated people. Employees. Think about it. What did they teach you in school about money? Nothing. Or worse than nothing. They taught you to get a job, work hard, save money, get out of debt, and invest in a diversified portfolio of stocks, bonds, and mutual funds. This is the worst possible advice in today's economy, yet it's what everyone is taught. They don't teach you about cash flow. They don't teach you about assets and liabilities. They don't teach you about good debt versus bad debt. They don't teach you about how the rich use corporations and legal entities to protect their wealth. They don't teach you about taxes. They don't teach you anything that would actually help you become wealthy. Why? Because the system doesn't want you to be wealthy. The system needs employees. It needs consumers. It needs people who will work their whole lives, pay taxes, and never question the system. My rich dad taught me that there are 4 quadrants where people earn money. The E quadrant, employee. The S quadrant, self-employed or small business owner. The B quadrant, big business owner. And the I quadrant, investor. Most people spend their entire lives on the left side of the quadrant in E and S. They trade their time for money. If they stop working, the money stops. The wealthy operate on the right side of the quadrant in B and I. They own systems that generate money. They own assets that generate cash flow. They don't trade time for money. Their money makes money while they sleep. This is the fundamental difference between the rich and everyone else. The poor and middle class work for money. The rich have money work for them. The poor and middle class acquire liabilities they think are assets. The rich acquire real assets that put money in their pocket. Let me explain what I mean by assets and liabilities, because this is where most people get confused. An asset is something that puts money in your pocket. A liability is something that takes money out of your pocket. It's that simple. It doesn't matter what your accountant says. It doesn't matter what the bank says. If it puts money in your pocket, it's an asset. If it takes money out of your pocket, it's a liability. Your house, the one you live in, is not an asset. I know that's controversial. I know people hate when I say this, but it's true. Your house takes money out of your pocket every month. Mortgage payment, property taxes, insurance, maintenance, utilities. Money flowing out, that makes it a liability, not an asset. Now, rental property that generates positive cash flow, that's an asset. It puts money in your pocket every month. The tenant pays you rent. That rent covers the mortgage, the taxes, the insurance, and hopefully leaves you with cash flow, money flowing in. That's an asset. A stock that pays dividends, that's an asset. A business that generates profit, that's an asset. Gold and silver, while they don't generate cash flow, they're assets because they protect your wealth from currency devaluation. Bitcoin, same thing. But a car, that's a liability. It depreciates, it costs money to maintain, it takes money out of your pocket. Credit card debt, that's a liability. Student loans, liabilities. A boat, a liability. That's why I joke that BOAT stands for bring out another 1,000. The rich focus on acquiring assets. The poor and middle class focus on acquiring liabilities they think are assets. And that's why the rich get richer and everyone else struggles. Now, let me tell you what I'm seeing in the economy right now that has me deeply concerned. We are in the biggest bubble in human history. Bigger than the dot-com bubble of the late 1990s. Bigger than the housing bubble of 2008. This is a bubble in everything. Stocks, bonds, real estate, cryptocurrencies. Everything is overvalued because of all the money printing. The Federal Reserve has created more money in the last 15 years than in all of previous American history combined. They've inflated the biggest bubble the world has ever seen. And like all bubbles, it will pop. The only question is when. When it pops, most people will lose everything. Their retirement accounts will be cut in half, their home values will plummet, their jobs will disappear. It's going to be ugly. Much uglier than 2008 because the bubble is so much bigger now. But here's the thing. This is also the greatest opportunity of our lifetime because in every crash, there's opportunity. In 2008, when everyone was panicking, I bought real estate for pennies on the dollar. Properties that used to be worth $500,000, I bought for $100,000. And I bought them with debt, with bank financing. People thought I was crazy. They said, get out of debt, save money, be safe. But I did the opposite. I went into more debt, good debt. Debt that put assets in my pocket that generated cash flow. And those assets made me wealthier than ever. The same thing is going to happen in the next crash. There will be incredible opportunities. Real estate will be on sale. Businesses will be on sale. Stocks will be on sale. Gold and silver will be on sale. Bitcoin will be on sale. Everything will be on sale. But most people won't have the financial education to recognize the opportunity. And even if they do, they won't have the money to take advantage of it because they followed the conventional advice to save money, get out of debt, and invest in mutual funds. Let me break down what I'm doing to prepare and how you can prepare too. First, I'm getting more liquid, but not in cash. Cash is trash. I'm accumulating gold, silver, and Bitcoin. These are real money. They can't be printed. They can't be debased. They hold their value over time. Gold has been money for 5,000 years. Every currency in history has eventually failed, but gold remains. Silver is the same. It's been money forever. And Bitcoin, while newer, is digital gold. It's limited supply. It's decentralized. The government can't print more of it. That makes it valuable. I'm also positioning myself to acquire assets when they go on sale. That means having access to capital, having lines of credit established, having relationships with lenders, having partners who have money. So when real estate crashes and properties are going for 50 cents on the dollar, I'm ready to buy. When stocks crash and good companies are trading for a fraction of their value, I'm ready to buy. Most people wait till after the crash, then they panic and sell. They do everything backwards. They buy when prices are high because everyone else is buying and they feel safe. Then they sell when prices are low because everyone else is selling and they're scared. Buy high, sell low. That's a recipe for poverty. The rich do the opposite. They sell when everyone is buying. They buy when everyone is selling. They're greedy when others are fearful, and fearful when others are greedy. Warren Buffett said that, and it's absolutely true. I'm also investing in my financial education. I'm constantly learning, reading books, attending seminars, networking with other investors. Because in the information age, the people with the best information win. And the best information doesn't come from school. It doesn't come from financial planners. It comes from people who are actually doing deals, actually building businesses, actually investing in real assets. Let me talk about debt for a minute, because this is where I get the most pushback. People say, Kiyosaki, you're crazy. You're too risky. You're going to lose everything with all that debt. But they don't understand the difference between good debt and bad debt. Bad debt is debt that takes money out of your pocket, credit card debt to buy things you don't need, a car loan for a fancy car you can't afford, a big mortgage on an expensive house, student loans for a degree that doesn't lead to a high-paying job. This is bad debt. It makes you poor. Good debt is debt that puts money in your pocket. A mortgage on a rental property that generates positive cash flow. A business loan that allows you to expand and make more profit. This is good debt. It makes you richer. The rich use debt as a tool. They use other people's money to acquire assets. Let me give you an example. Let's say I want to buy a rental property that costs $1 million. If I use my own money, I need $1 million to buy one property. But if I use the bank's money with a 20% down payment, I only need $200,000 of my own money, and I can buy 5 properties instead of 1. Now, let's say each property generates $10,000 a year in cash flow after all expenses. With 1 property bought with cash, I make $10,000 a year. With 5 properties bought with leverage, I make $50,000 a year, same amount of my own money invested, but 5 times the return. That's the power of leverage. That's the power of good debt. And here's the kicker. When the economy inflates, when the dollar loses value, the debt becomes easier to pay off. If I borrowed $1 million today, and there's high inflation over the next 10 years, that $1 million of debt becomes much easier to pay off because my rents go up with inflation, but my mortgage payment stays the same. The bank loaned me $1 million, but I'm paying it back with inflated, less valuable dollars. The bank loses. I win. This is what the rich understand that the poor and middle class don't. In an inflationary environment, savers lose and debtors win, as long as the debt is good debt, debt that's backed by cash flowing assets. Now let me talk about retirement and why the traditional retirement advice is a trap. You've been told your whole life to contribute to a 401k or an IRA. Put your money in a diversified portfolio of mutual funds. Let it grow for 40 years. Retire at 65 and live off your savings. This advice made sense 50 years ago when we were on the gold standard, when the dollar was sound money, when pension plans were common. But it doesn't make sense today. Today is a trap. First, your 401k is invested in paper assets, stocks and bonds. When the market crashes, and it will crash, your retirement account crashes with it. In 2008, the average 401k lost 40% of its value. 40%. Imagine working for 30 years, saving and investing, and then losing 40% of it in 1 year. That's what happened to millions of people. Second, you have no control. You're at the mercy of the market, at the mercy of fund managers who charge you fees, whether you make money or lose money, at the mercy of companies that may or may not be well run. You have no control. Third, when you retire and start taking money out, you pay taxes on it. You pay taxes at your ordinary income tax rate, which is the highest tax rate. You deferred paying taxes for 40 years, but eventually you have to pay, and you're paying at the worst possible rate. Compare this to my strategy. I invest in real assets that I control. Real estate, businesses, commodities. These assets generate cash flow now. I don't have to wait till I'm 65 to access the money. The cash flow is coming in every month. And because I structure things properly, using corporations and understanding the tax code, I pay very little in taxes. I have control. If the real estate market is bad, I can change my strategy. If a business isn't performing, I can fix it or sell it. I'm not at the mercy of the stock market or a fund manager. And here's the beautiful thing. My assets appreciate in value over time, especially in an inflationary environment, but I never have to sell them to access the wealth. The cash flow keeps coming. I can pass these assets on to my children. They can pass them to their children. Generational wealth. That's how the rich think. They're not thinking about retirement. They're thinking about cash flow and generational wealth. They're building empires that will last beyond their lifetime. Now, I want to address the elephant in the room. What about Social Security and Medicare? Can you count on them? The short answer is no. These are Ponzi schemes. They only work as long as there are more people paying in than taking out. But with the baby boomers retiring and fewer workers supporting them, the math doesn't work anymore. Social Security will be bankrupt in the next 10 to 15 years. When I say bankrupt, I don't mean it will disappear completely, but benefits will be cut significantly. You won't get what you were promised. And even if you do get something, it won't be enough to live on because of inflation. Medicare is in even worse shape. Healthcare costs are skyrocketing. The government can't afford to pay for everyone's healthcare. There will be rationing. There will be reduced benefits. There will be means testing where wealthy people don't get benefits at all. So if you're counting on Social Security and Medicare to take care of you in retirement, you're in for a rude awakening. You need to take care of yourself. You need assets that generate cash flow. You need to be financially independent. Let me talk about another topic that gets me fired up: financial advisors and financial planners. Most of them are salespeople. They're not educators. They don't teach you about money. They sell you products, mutual funds, insurance, annuities, products that pay them a commission. And the advice they give is terrible. It's the same advice everyone gets. Diversify. Buy and hold for the long term. Don't try to time the market. This is lazy advice. It's advice that makes them money, not advice that makes you money. Real investors don't diversify. They focus. Warren Buffett said diversification is protection against ignorance. If you know what you're doing, you don't need to diversify. You focus on what you know, what you're good at, and you go deep. I focus on real estate. That's what I know. That's what I'm good at. I don't own a bunch of different things. I focus, and that focus has made me wealthy. Buy and hold for the long term. This is the advice that killed people in 2008. They held on while their portfolios dropped by 40, 50, 60%. They should have sold. They should have gotten out. But their financial advisor told them to stay the course, hold for the long term. Terrible advice. Real investors actively manage their investments. They watch the market. They know when to get in and when to get out. They don't just buy and hope. They have a strategy. And don't try to time the market. This is what financial advisors say when they don't know what they're doing. Of course, you should try to time the market. You should buy low and sell high. That's the whole point. Now, you might not always get it exactly right, but you should be paying attention. You should be aware of market cycles. You should have a sense of when things are overvalued and when they're undervalued. The problem is most financial advisors don't know how to do this. They don't understand market cycles. They don't understand value investing. So they give you generic advice that covers their ass but doesn't help you. If you want to become wealthy, you need to fire your financial advisor and get a financial education. Learn about money yourself. Don't trust someone else with your financial future. Take responsibility. Now let me address something that a lot of young people are concerned about: student loan debt. This is a massive problem in America. Students are graduating with $50,000, $100,000, even $200,000 in debt, and they can't find jobs that pay enough to cover the debt payments. This is a crisis. And it's not the students' fault. They were told to go to college, get a degree, and they'd get a good job. They were lied to. College is a scam for most people. You go into massive debt to get a degree that doesn't lead to a high-paying job, and you can't discharge the debt in bankruptcy. You're stuck with it for life. My advice to young people is this: don't go to college unless you have a specific plan. If you want to be a doctor, a lawyer, an engineer, something that requires a degree and leads to a high-paying job, then okay, go to college. But don't go just because everyone else is going. Don't go to study something vague like communications or sociology or gender studies. These degrees are worthless in the job market, and you'll be stuck with debt and no way to pay it off. Instead, get a financial education, read books, take courses, learn about money, investing, business, sales. These are the skills that will actually make you wealthy, and you don't need a college degree to learn them. Or better yet, start a business. You don't need money to start a business. You need an idea, hustle, and willingness to learn. Some of the wealthiest people I know never went to college. They started businesses. They learned by doing, and they became financially free while their college-educated peers were stuck in cubicles paying off student loans. If you already have student loan debt, here's what I'd do. Minimize your lifestyle expenses. Live cheap. Put every extra dollar toward paying off the debt as fast as possible. And while you're doing that, start a side business. Use the income from the business to pay off the debt faster. Once the debt is paid off, take that business and scale it. Build it into something that generates serious cash flow. Don't just get a job and make minimum payments for 30 years. That's a prison sentence. Attack the debt aggressively. Get it behind you. And then focus on building wealth. Let me talk about a concept that's central to my philosophy: financial intelligence. This is different from academic intelligence. You can have a high IQ and be financially stupid. My poor dad was proof of that. He had a PhD, but struggled with money his whole life. Financial intelligence has 4 components: accounting, the ability to read numbers, investment strategy, the science of money, making money, market analysis, understanding supply and demand, and the law, knowing tax advantages, and corporate law. Most people are weak in all 4 areas. They don't understand financial statements. They don't have an investment strategy. They don't understand markets. And they have no idea about the legal structures the rich use to protect and grow their wealth. This is why the rich get richer. They have financial intelligence. They understand the game. They know the rules. And they play by a different set of rules than everyone else. The good news is you can develop financial intelligence. It's not something you're born with. It's something you learn. But you have to seek out the education. You have to invest in yourself. You have to read books, take courses, attend seminars, find mentors. This is where most people fail. They don't invest in their financial education. They spend $40,000 on a college degree. That makes them an employee. But they won't spend $40 on a book that could teach them how to become an investor. It makes no sense. I've spent hundreds of thousands of dollars on my education over the years, seminars, courses, coaching, and it's been the best investment I've ever made because what I learned made me millions of dollars. The return on investment is infinite. Let me talk about something that's controversial: cryptocurrency, specifically Bitcoin. A lot of people my age don't understand it. They think it's a scam. They think it's fake money, but they're wrong. Bitcoin is the future of money. It's decentralized, meaning no government controls it. It's limited supply. Only 21 million Bitcoin will ever exist. It's digital, so it can be transferred anywhere in the world instantly, and it's based on blockchain technology, which is secure and transparent. The dollar is dying. The government is printing it into oblivion. Bitcoin is the alternative. It's digital gold, and smart people are getting into it now before it becomes mainstream. Now, I'm not saying put all your money in Bitcoin. I'm saying it should be part of your portfolio, along with gold, silver, real estate, and businesses. Diversification across real assets, not paper assets. The old financial advisors tell you to buy stocks, bonds, and mutual funds. The new financial education says buy Bitcoin, gold, silver, real estate, and cash flowing businesses. Big difference. I'm heavily invested in all of these, and I'm comfortable with volatility. I don't panic when Bitcoin drops by 30%. I buy more. I don't panic when the real estate market softens. I buy more because I understand market cycles. I understand that prices go up and down, and the best time to buy is when prices are down and everyone is scared. Now, let me address the people who say, Kiyosaki, you're just trying to scare people. You're a fearmonger. You're always predicting doom and gloom. Here's my response. I'm not trying to scare you. I'm trying to wake you up. The American dream, as it was sold to our parents' generation, is dead. You can't just go to school, get a job, work hard for 40 years, and retire comfortably anymore. That playbook doesn't work in today's economy. The rules have changed. The game has changed. And if you keep playing by the old rules, you're going to lose. I'm not being negative. I'm being realistic. And I'm offering solutions. I'm telling you how to win in this new economy. But you have to be willing to change. You have to be willing to question everything you've been taught about money. You have to be willing to get financially educated. The opportunity is there. The next 10 years are going to be the greatest opportunity for wealth creation in history, but only for people who are prepared. Only for people who understand what's happening. Only for people who have the financial intelligence to see the opportunity when everyone else sees disaster. Think about this. In 1930, during the Great Depression, more millionaires were made than in any previous decade in American history. How is that possible? Because some people understood what was happening. They understood that assets were on sale, and they had the capital and the courage to buy when everyone else was selling. The same thing happened in 2008. While most people were panicking and losing their homes, smart investors were buying real estate for pennies on the dollar, and they made fortunes. The same thing is going to happen in the next crash, and it's coming. I don't know exactly when, but it's coming. And when it does, there will be unprecedented opportunity. But you need to prepare now. You need to get liquid, get educated, and get ready. I want to leave you with this. Your greatest asset is your mind. Your greatest tool is your financial education. Money isn't real. It's an idea. And if you understand how money works, if you understand the rules of money, you can create as much of it as you want. The poor and middle class work for money. The rich create money. They see opportunities where others see problems. They see assets where others see liabilities. They see abundance where others see scarcity. This is possible for you too. But you have to change your mindset. You have to stop thinking like an employee and start thinking like an investor. You have to stop trading time for money and start building assets that generate cash flow. You have to stop following the conventional wisdom and start questioning everything. The path to wealth isn't easy. It requires discipline, education, risk-taking, and persistence. There will be failures along the way. I've had plenty of failures. But each failure taught me something. Each failure made me smarter, stronger, better. Rich Dad used to say winners are not afraid of losing, but losers are. Failure is part of the process of success. People who avoid failure also avoid success. You have to be willing to fail. You have to be willing to take risks. You have to be willing to be uncomfortable. Most people play it safe. They get a secure job. They save money in the bank. They invest in mutual funds. They buy a house with a 30-year mortgage. They think they're being smart. They think they're being responsible. But they're actually playing the most dangerous game of all because they have no control. They're completely dependent on the system. And when the system fails, and it will fail, they'll lose everything. I choose to play a different game, a game where I have control, where I make the rules, where I win regardless of what happens in the economy. When the economy is good, I make money. When the economy is bad, I make money because I own assets that perform in any environment. You can do the same, but you have to commit to your financial education. You have to commit to becoming financially intelligent. You have to commit to building assets and creating cash flow. The time to start is now, not tomorrow, not next week, not when you have more money or more time. Now, start small if you have to. Read a book, take a course, attend a seminar, find a mentor, start a side business, buy your first rental property, buy some gold or silver, buy some Bitcoin, just do something. Because the biggest risk of all is doing nothing. The biggest risk is waiting. The biggest risk is hoping things will work out. They won't work out. Not if you just sit there and do nothing. You have to take action. You have to take control of your financial future. Nobody's going to do it for you. Not the government, not your employer, not your financial advisor. You have to do it yourself. And I'll tell you something else. When you start building wealth, when you start creating cash flow, when you start becoming financially free, people are going to criticize you. They're going to call you lucky. They're going to call you greedy. They're going to say you're taking advantage of people. Ignore them. These are poor people with poor person mentality. They don't understand what you're doing. And they're jealous. Rich Dad taught me that if you're not being criticized, you're not doing anything significant. The people who matter, the people who are also building wealth, they'll understand, they'll support you, they'll want to learn from you. Focus on those people. Surround yourself with people who are smarter than you, richer than you, more successful than you. Learn from them. Model them. This is how you accelerate your growth. If you're the smartest person in the room, you're in the wrong room. I've been fortunate to learn from some incredible people. My rich dad, of course, but also other investors, entrepreneurs, business owners. I'm always learning, always growing, always trying to get better. And I'm 76 years old. I'm not slowing down because wealth building is a game, and I love the game. You should love the game too. Don't think of wealth building as work or as a sacrifice. Think of it as a game where you're constantly learning, constantly improving, constantly leveling up. That makes it fun. That makes it exciting. That makes it something you want to do, not something you have to do. This is my message to you. Wake up, get educated, take action, build wealth, create freedom, and help others do the same. Because that's what it's all about. Not just building wealth for yourself, but teaching others how to do it too. Lifting others up, creating a better world. The system is broken. The old playbook doesn't work. But you have the power to create your own path. You have the power to build wealth. You have the power to achieve financial freedom. You just have to commit to it. You just have to do the work. The next 10 years will separate the winners from the losers. The people who prepare and take action will thrive. The people who sit around and hope things get better will struggle. Which one will you be? The choice is yours. Choose wisely.